And good afternoon to all of you joining us today. I see attendees numbers are coming up a bit as we go here. This is Chris Oswald from Airports Council International North America, welcoming all of you to the third in our Construction Strategy Summit webinar series. This is focused today particularly on construction project insurance and some of the issues that have cropped up, or maybe just to dispense with some of the mythology that might be out there on issues that folks are thinking are cropping up coming out of the pandemic. Last two have focused on certainly what the status of construction projects were just as we were entering this back in early April. And then we had a second one that dealt with some of the legal and contractual issues. So glad to have a great panel today, which we'll get to those introductions in just a few minutes. We'll just do some quick ground rules here for everyone who's participating, and we'll start with a welcome. Of course, I've already done the welcome from the ACI side. Let me turn to TJ Schultz first, and then Sarah Gallegos from ACC and AGC, respectively, our co-hosts today.
Thanks, Chris. Hi, all. This is TJ Schultz. Hi, this is TJ Schultz, President of the Airport Consultants Council. Welcome to our third webinar, and also want to acknowledge and thank Chris for his excellent work in helping to organize and host the webinar. So thank you, Chris. Sarah?
Yeah, absolutely.
Great, thanks, TJ. Again, this is Sarah Gallegos with AGC of America. I am the Association's building director, so I oversee private vertical construction for our organization. And just want to echo TJ and thank Chris for helping really spearheading and getting these webinars up and running, and also thank our panelists today. So I think you're in for a great program. All right, Chris, I'll hand it back over to you.
Thanks so much. So just really quickly on how we'll handle this, for those of you that have participated in our prior couple of webinars, this will be old hat, but please use the GoToWebinar question panel, which should be in your control panel that pops up to submit questions while the panel's presenting. You can do that at any time. You can also post any technical issues that you might be seeing there, or any comments that you want to present. We also would ask you to raise virtual hands if you'd like to ask a question via traditional audio route. It's always good to know that there are people at the end of the line, so don't be shy there. You will have a virtual hand that you can raise over in the audience menu that you'll see, or attendee menu, and certainly feel free to use that as you go. We'll be monitoring that on our side here at ACI-NA as we go. And when you do provide that information, either via the question panel or via audio, please identify yourself. It's good to know what organization you're coming from. Some of the names are unfamiliar to me, so appreciate that if you can do that. Just moving on real quick, some other webinar details. As I'd already mentioned, if you have any technical issues as we go, please post that into the questions panel if you can do so, or you can email the webinar team at webinars@airportscouncil.org. We are recording today, and that recording has started. It started when we opened up the webinar, so it will be available offline, and we'll make sure that we've got a link back into all three. I think I have had some questions from about the earlier ones as well, and I think each association is posting those a little bit different places, but we'll certainly, on the ACI side, provide our link. That should be available, again, within a week or less. So with that, not a lot in terms of like the overall introductions that I need to do. And I'm just doing one. I'm just going to go to Robert Alfert, partner at Nelson's, Mullins, Broad & Cassel, who has been very kind, not only in agreeing to moderate this session, but in being willing to really drive a lot of the content together with John Palin, who I have to mention from HKA, who's been through, really helping us out with all of these. And I'm going to spend just a quick second. For the panelists, I am getting a little bit of feedback, audio feedback from somebody's line. So if you guys don't mind muting until Robert introduces you all, that'd be great. Thanks very much. So Robert, with that, let me just turn it over to you really to introduce today's panel, if you don't mind. And I look forward to your guys' discussion. Thanks.
Absolutely, Chris, and thank you very much. And thank you to all the attendees We really do have an excellent panel for all of you today. We're going to be covering, obviously, the COVID-19 impacts on our industry, the aviation sector, and melding that discussion into airport project insurance and the like. I'm going to introduce the panelists in a minute. We got a flight of what I call true industry experts, but I want to make a couple of introductory comments. For those of us that have been in the industry for a long time, and I'm talking, the 20-plus year cycle, we've been through 9/11, we've been through the 2008 recession, and here we find ourselves yet again in what I call unprecedented times that bring up new challenges, novel issues that, frankly, some of us have never dealt with before. So it really is a topic that is ripe for a lot of discussion. It's really interesting, the cycle of how we got from point A to point B. If you think about it, for about 6-7 years, we have been on an incredible build cycle. It's been unprecedented in terms of scale. We've entered the era of what I call the mega projects and public-private partnerships. Seems like every major airport and transportation facility has embarked on multi-billion-dollar projects and programs. And then all of a sudden, boom, the entire nation, the entire world shuts down. We've got stop work orders issued. Projects have halted. We've had delays. We've had projects terminated and canceled. We've had supply chain delivery impacts, workers getting sick, and obviously everyone losing an enormous amount of revenue. The airport sector in particular has been particularly impacted. 2020 was supposed to be a banner year for our industry. I know ACI had originally projected global airport revenue literally in the $172 billion range. Think about that number, $172 billion. Now it's projecting of a global loss of about $76 billion. Just in the U.S. alone, ACI is projecting an airport revenue loss of $14 billion. So one of the topics we want to be covering today is not just a general project coverage that may be of consequence here, but also we're going to address as best we can that $64,000 question, i.e. the recovery of business impacts under the various insurance policies that airports tend to procure. We may not have a perfect answer on that. It's an open question. Mr. Terlecki is going to be taking that one squarely for us. But what I want to do is tell you basically what we're going to cover. We're going to have it broken into sections, but there may be bleed over between the two. One, we want to jump straight into the owner perspective, i.e. the airports. Then we're going to cover what we perceive to be the industry perspective. And then we're going to button that up with the insurance perspective, and that will be Mr. Richard Terlecki. Then we'll bleed into some global discussion on strategic thoughts, some lessons learned, and hopefully roll that into a Q&A session as well. But I also want to be very clear that we'll entertain questions as they are posed throughout the entire program. So if you have a question, submit it, and I'll see it on my screen, and I'll weave it into the program as best we can. In terms of our panelists, again, I'm really excited about the group that we have here because we have really true industry experts. So I'm going to start first with Catrina Gilbert. I know most of you probably know exactly who she is. She is the VP of Risk Management at one of our major airports, Dallas-Fort Worth, and she also chairs the ACI North America Risk Management Committee. She's currently presiding over a capital improvement program at Dallas-Fort Worth of about $1.2 billion. And she leads all of the planning and execution of enterprise risk management programs that affect Dallas-Fort Worth strategic plan. So for this discussion, she is what I would call epicenter from the owner's perspective. We also have Mike Williams, which I know a lot of you know who this is as well, Program Director of Salt Lake City Department of Airports. I think a lot of us have been following Salt Lake City very closely because, one, it's one of the largest capital improvement programs in the country with about a $4 billion new terminal program underway, and probably the most pressing one because they go live in September, and Mike will give you some insight on that, but every indication I've been given is they are not stopping. They are going to open in September, so clearly they've had some challenges to grapple with, so we'd love to hear how they're handling that. Then from the private industry perspective, we have Roger Johnson. He is one of the aviation program executives with Jacobs. Many of you may know Roger from his prior stint, a very long stint, at Los Angeles World Airports, 15 years as the Deputy Executive Director. And I was just speaking with Roger offline earlier. You all probably know he was presiding over one of the largest P3 programs in the country at LAWA, rolling out in particular the Landside Access Modernization Program, which was a $4.9 billion transit program. So a lot of insight to bring to the table there. Then also rounding out the industry perspective, we have Nicole Mangino, Head of Underwriting and Field Operations for AXA XL. She's been in that realm for a long time, handling the design professional group. She also has an intriguing background as a commercial litigator, so she'll bring some unique insight into some of the claim scenarios. She's been with AXA XL since 2006, and her specialty again is design professional liability. And then we're going to round out with the insurance industry perspective, and I hope you all are going to have a lot of tough questions from my good friend Rich Terlecki. Rich has been with Gallagher for a very long time. He is one of the senior VPs, and I think you all probably have met him before. He represents some of the most significant airports in the U.S., helping them write coverage. I think by last count, he's written coverage or had coverage written on over 5,000 public entities. And the well-known Risk and Insurance magazine has listed him as one of the major power brokers in the insurance sector. And he definitely has some definitive opinions here. If any of you are not on his email circulars, I would encourage you to reach out to him, because it seems like every day he has some unique insight on what's going on with this COVID crisis. So what I'd like to do is start off first with the owner perspective. And Mike Williams, if I can get you to help us kick off the discussion. Obviously you guys are embarking and rounding out the completion of that major terminal program. Maybe you can just give us some comments on the status of that project and just general state of affairs going on at Salt Lake City.
Sure. So we're still here, and in spite of everything. So it's been an interesting spring. As Robert said, we are marching towards September 15th opening of the first major phase of the program. It's a long phase project because we're building a new airport on top of the existing airport. So you build new stuff and knock stuff down, and build some more and knock some more down. So the first major opening is really necessary so you can build the rest. So we're opening 25 new gates and new terminal building and a lot of supporting facilities on September 15th. And then 6 weeks later, we'll deliver 20 more gates on the second concourse, which completes the first half of the program. So when all of this started in March, we, like any big program like this, we already had our challenges that we were dealing with day in and day out. And then COVID-19 started. Right after COVID-19 started, we had a 5.7 earthquake. And then, of course, now we have riots and other things going on. So it's definitely been interesting. We're lucky here in that we have a really experienced team on the construction side, program management side, and the airport. But on the construction side, we just immediately developed all kinds of written processes and procedures, knowing that we were going to have to do a lot to be able to keep the workforce here. So we have written procedures that we put out first starting in March, and they have been developed since. They cover the cleaning, sanitizing. We were busing workers to the job site. Since with the downturn, the economy lot was all but empty. We moved them there so that they could walk to the job site. So because social distancing on a bus is pretty difficult. We have temperature check stations whenever you walk onto the job site or drive to the trailer complex from anywhere. We have a travel policy of what you have to do if you do go anywhere. And so through all of that, we have been able to keep the workforce enthused and working. Right now, we average around 1,900 trade workers a day on the job site throughout the program. So you can imagine trying to get all of those people to wear their face masks and do all the social distance and everything. It takes a bit of reminding, but you'd be amazed. We have photographs of people having, like field meetings, and they're all spaced apart. They've done a great job. So that has really enabled us to keep the program on schedule and tracking forward. We have really had a minimal amount for having 1,900 workers on site. We've had a minimal amount of positive tests, and really all of those that we have had, one of our policies is that you don't come to work if you're sick. We've had some people that called in sick, and most of them have been exposed to doing things off of the job site. We haven't really had any worker-to-worker transmissions. We're a little concerned right now because with all of the easing of the restrictions and everything else, people are starting to act like things are okay again, and we all know they're not. So we're keeping everything in force here on site. The way the insurance for the project here is covered or handled, we have a construction manager risk on the main program, Holder out of Atlanta, and Big D Construction from Salt Lake City. And then the other concourse has Austin Commercial and Oakland Construction from Salt Lake City. And on the main program, we have a CSIP that is in place. So we have a construction controlled insurance program. And then they are also required to handle professional liability and the other standard auto policies and workers' comp and all that. The other program, there isn't a CSIP, it's just all traditional contractual insurance. So they have to carry the general liability and everything else. The airport, the owner, Salt Lake City Department of Airports, actually has an OPPI, an owner protective policy that sits on top of the professional liability policies. But we haven't had any major claims or anything against any of those policies, and we haven't really had any issues related to insurance or anything else since COVID-19 started, related to COVID-19.
So Mike, you all at Salt Lake City obviously have a unique challenge because one, you are running an open operational terminal, the Salt Lake City that we've all flown through. And then just several hundred yards away, you're building a brand new, multi-billion-dollar terminal. Give us a sense of the type of impacts, if any, that the airport has been suffering on either of these two operations, whether it's the range of, business losses from concessions and the like, to maybe any construction impacts, delays, subcontractor defaults, things of that nature.
Overall, we have not had any major impacts while we were doing the construction. Our policies going into this were that we would have zero impacts on landside or airside. Like any big program like this, we've moved the roads around a few times in the front. That drives everybody crazy. But other than that, once they get used to it, we haven't really had any. We haven't had any major impacts as far as the airport operation or the concessions or anything else while we were building. There are a few parts and pieces of the airport we took away while we were building this, and of course those concessions went away. Since COVID-19, like anywhere else, the airport has become a ghost town. So of the 10,000 economy lot spaces, we were all really excited last Thursday when we had 1,000 cars that slept overnight. That was a really big deal. And the airport, as far as passengers through the front door, it normally varies from this time of year, probably around 25,000. Some peak days like President's Day weekend, we'll hit 32, 33,000. We were really setting, a record every month or every day almost up to this. At the beginning part of the COVID-19, we had about 800 passengers through the checkpoint. Right now, we've kind of creeped up a little more and a little more and a little more every day, and we're around 5,000 right now. But, you know, you compare that 5,000 to, we should be around 25,000 at least. So the concessionaires have definitely been impacted. The rental cars have been impacted, you know, because there's no passengers.
Sure, and obviously the impact to concessions to the rental car companies obviously has a cascading impact on your overall revenue. Is the airport doing anything vis-a-vis its property coverage or maybe even its builder's risk coverages to seek recourse or recovery for business interruption losses? Is there any avenue or opportunity there that you've been able to ferret out?
So far, the airport's not doing anything related to anything like that. You know, the Salt Lake City Airport has really been well run from a financial standpoint for years and years and years, and they actually have, you know, cash in addition to the bonds that have been sold for the construction. But the airport had no debt at all for about 10 years, so financially they're in really solid shape. They did get some of the CARES Act money when that was distributed. So if this goes on like forever, there'll be some bad days ahead of us. Right now, you know, they're doing okay.
Thank you. So let me flip to Catrina Gilbert. You know, Catrina, you're unlike Mike, who's managing predominantly a single major project. I know you've got a very robust CIP, and when I looked at the list you sent me, it looked like multiple ongoing projects, which of course creates a lot more risk, a lot more to coordinate. What is Dallas-Fort Worth experiencing with respect to COVID-related project impacts and impacts to its business and operations?
Thanks so much for that. It's a really good question. And in line with what Mike was stating regarding Salt Lake City, we've seen some similar impacts. Of course, we share that with probably all of the airports. But again, it's just that having the experienced team that we have in place here, and even with this massive list that I sent to you of our current projects that are in our ROSIP right now, we're able to maintain that momentum. Actually, some projects are picking up steam because we're able to do things quicker because of the lack of passenger flow. So normally we would have to close some runways down or probably do some things at night. We're able to accelerate some of those project lists. Another great thing that I will say about our program is that similar to Mike's, we also have a SIP, but ours is a ROSIP, and it's a GL only ROSIP. And just by design, that does not include workers' compensation. So as you're looking at your work comp claim that some contractors may experience as it relates to COVID, some of those things we have not had to endure with our current ROSIP projects. So similar to some of the other things in having proper processes and procedures in place for our health and sanitization, decontamination, social distancing, face covers, all of the things that you're seeing in the media and through the CDC recommendations, those are the things that we have in place here. We're doing virtual safety trainings to ensure the health and safety of all of our employees, especially our construction workers. So those are some of the things that we're doing to make sure that we not only stay on track with our projects, that we can possibly get ahead of some projects while ensuring the safety of our workers.
Great, thank you. So you mentioned the ROSIP, which is a rolling owner-controlled insurance program, but I think you qualified that it was general liability only. Can you give the attendees, the audience, sort of a general idea of what your entire insurance matrix is at Dallas-Fort Worth?
Outside of the ROSIP, and just for that ROSIP, we say GL only, but there are other coverages, of course, that are included in that. It's just that GL is that huge piece of the pie that enables some of our small and minority business owners that opportunity to do work on airport property. But auto is also included in some of that. Some other smaller coverages are included in that. But the key is that the workers' compensation is something that that contractor would have to bring and provide for that construction project. Other coverages that we have that, of course, during COVID, we're having to make some changes or modifications or having additional conversations with our brokers would be, of course, with our cyber liability. A lot of organizations are having issues and concerns with cyber and hacking during this time, even with some construction projects and construction equipment. Cyber has far-reaching implications, and those are some of the things that we're working on, as well as our geo coverage, of course, our airport liability with our enplanements and working with our broker on those, because of course your premium is somehow allocated or attached to your enplanements. So of course, now that we're seeing fewer of those enplanements, we're working with our broker on those coverages as well. So there are a number of coverages that may or may not be directly related to construction that we're still working on as a whole to ensure that we're still functioning as best we can and ensuring as best we can and mitigating where we can some of the issues that we're seeing related to COVID.
So in terms of the project-related coverage, builder's risk, is the builder's risk being supplied by Dallas-Fort Worth? Or are you having the contractors supply that? And then I'm also curious, we haven't talked about performance bonds either. Would you add another layer of protection for, things that could arise from a COVID scenario, defaulting subs, i.e. a subcontractor whose entire workforce has actually caught COVID, or contractors and subcontractors that had, very painful financial consequences and have gone out of business. Is DFW requiring PNP bonds on all of its projects?
We are requiring performance and payment bonds. We are working with some of our contractors because we understand that some contractors are having issues, of course, with parts, equipment, due to production in other countries. So we're working with them from that perspective and not trying to have one bond after the other speak for timing delays that we may experience, understanding the circumstances that will impact many contractors, not just the ones on our projects, but the ones on other airports as well. And the builder's risk is a part of that ROSIP program. So we're trying to make sure that we're safeguarding as best we can while working with not only our carriers, but the carriers for our contractors as well.
So in terms of the property coverage and the builder's risk coverage, obviously, like many other airports, I'm sure Dallas-Fort Worth is experiencing a pretty substantial revenue decline. Concessions has been hit, rental cars have been hit. Is the airport doing anything to seek alternative recovery sources for the business interruption losses? For example, are you reaching out to your carriers? Is that an opportunity for you?
We're reaching out and we're having that conversation. As many other airports can probably understand, it's really early in that process. We're trying to see what's a trigger and what's not a trigger when you're talking about business interruption, especially with your property coverage or any other coverages. That trigger is key. Even in some other policies, such as our pollution policy, again, it's the triggering and the wordings that we have to be concerned with. So yes, definitely working with our carriers on those to make sure that we're preserving our rights as best we can, knowing that at some point, if not already, and I know today I've seen some things in the media, that lawsuits are beginning to fly, and insurers and carriers are definitely on the bad end of some of those lawsuits. So we're just making sure that we're having those conversations to, again, preserve rights as best we possibly can, knowing that at this stage of the game, it's really hard to tell as to how this will transpire going forward.
So in terms of risk management, risk assessment, which obviously that is one of your predominant roles there at the airport. For example, on construction contracts, a lot of us in the industry have done a complete rethink on some of the key risk provisions. For example, force majeure. Now we're writing contracts with a little bit greater specificity to cover pandemics and epidemics, and not just assume a court will agree that it falls under the act of God definition. We're looking to the obvious suspension provisions, to the termination provisions, to see how those can be better crafted to handle, some of the risks that arise in a COVID type scenario. Are you doing anything in that regard vis-a-vis your contracting methodologies or any other insurance policies or programs that you're looking to on a going forward basis?
Right. we're doing those things definitely with the force majeure that I mentioned earlier, of just making sure, one, that we're working with our contractors. Fortunately, again, it's all about having just great teams. And so we had great team members in our procurement and contracts and our legal teams. So a lot of that information, by the grace of God, was already in a lot of our contracts, and has spared us some of the heartache that I think I've seen in the industry. And then just from a go-forward perspective, with some of the things that we are seeing from COVID, as I mentioned earlier, like with some of our pollution policies, of just taking that harder look. I think COVID has exposed a lot of those things on a lot of different levels with our programs and our insurance policies, that we're having to take a step back and take another look with our legal department and with our broker to see how can we best be prepared for the next COVID or the next pandemic.
Thank you. So let me flip back to Mike real quickly. Mike, I obviously spoke with Catrina about payment and performance bonds, and when you were outlining your risk management program and your insurance program, I don't think I heard any reference to bonds. I'm curious if that is a part of your program as well, whether you require that on all of your construction projects.
We do. The airport does on all CIP projects, contracts, and then on the work that we're doing on the major programs through the construction manager as a risk. They have PNP bonds on everything. So all of the trade contractors are pre-qualified, and then they bid on the work and they have to have a payment and performance bond.
What about SubGuard or subcontractor default insurance? Are you all, and Catrina, that'd be a question for you as well, are you allowing that, paying for it, or requiring it on any of your projects?
At the beginning of the programs, both teams, of course, came in and made their pitch for that being something that the owner should consider, but we don't have a SubGuard program anywhere on the program, either contract. It is a program that's been used. I've been on projects where it's there, but it does really protect the construction manager more than the owner. So in this case, we chose not to go that route.
It's obviously a very popular program in private industry where the major developers and major CMs tend to use SubGuard over bonds, where in the public sector, where many of the states require bonds, I see that a lot of the governmental agencies are not allowing or not paying for SDI as well, because essentially you've got some degree of double bonding. But there is some benefit there. Obviously there's a cost associated with it. But I am curious, Catrina, whether Dallas-Fort Worth on any of its projects is using SubGuard or SDI as well.
We are on some of our projects. Similar to your point, we are trying to make sure that our projects are guarded as best we can. But also to your point, with the requiring the performance and payment bond, again, just trying to make sure that projects are starting on time, finishing on time. If there is any bonding requirements, or if we're scheduled to start at a certain time, knowing that this pandemic could delay the start of certain projects. For example, if you're building a hotel, for example, and you've taken out bonds and you're required to open that hotel by September, similar to your terminal. So those are some things that we've taken into account in trying to make sure that we had bonding capabilities lined up for as many projects as we could possibly get under our SIP program.
Right, thank you. So let me flip to what I call the industry perspective. And again, as I identified, we're going to have Roger Johnson from Jacobs Engineering address that, and Nicole Mangino as well from AXA XL. Roger, let me go ahead and start with you. I mean, you saw me tee up the question for Mike and Catrina about what they're seeing in the industry and specifically on their projects. Could you go ahead and address that as well for the audience?
Yeah, I can. Mine's going to be a lot shorter because it's nowhere near as interesting or as many changes, I guess. But actually, before I do that, let me go down memory lane here for a sec on your SubGuard question. LAWA actually did start using SubGuard, and the primary reason that we got into SubGuard is we had a bond assistance program for DBEs and small businesses, and the city actually had some what we learned later on some significant liability through that bond assistance program, that LAWA was in fact backing the subs and backing the bonds through the bond assistance program. So as a way to encourage small and disadvantaged business participation, we started to allow the SubGuard program as opposed to requiring performance bonds for some of the smaller businesses. And I think it was fairly successful in helping us to increase our small and disadvantaged business percentages. So with respect to the industry right now, as I said, mine will be fairly boring. I think the biggest challenge that we're starting to run into right now is we're actually working on several of the major projects that we've been talking about today, as well as others. And as one of the problems that we're starting to run into is as we run into insurances starting to expire and having to go out and recompete or look for new insurance, what we're seeing is a definite increase in some of the rates. And I think if I were to use one term to kind of characterize what everybody is going through right now, it's uncertainty. And I know we've got some great insurance experts on here, so I don't want to talk for them, but I can only imagine the uncertainty that they're going through. Catrina mentioned right now starting to see some lawsuits that insurance companies, and the potential liabilities out there have got to be huge. From a risk perspective, I would say right now, one of the things that's taking up a lot of our time, and can't get into it a whole lot other than as the country starts coming back online, we're really taking a look at what that means for us as we start opening our offices, as we start allowing employees to travel, as we start moving forward, populating things. Well, how do we manage that risk, both from just a pure physical perspective, but how do we make sure that we're doing it wisely, and how do we make sure that we're protecting ourselves and protecting our employees to the largest degree possible. So, I mean, I think the good news from the industry perspective is we're seeing an unavailability of insurance at this point in time. We are seeing some increases in what the rates are. I think, I mentioned to you earlier, we've been looking at some professional liability insurance, project specific. We're seeing rates go up on that. So that's probably one of the biggest challenges that we're looking at. I will say from a contractor perspective, not just from the engineering and PMCM, there's some interesting challenges going on as we're starting to see different states and different jurisdictions start to come with requirements for medical monitoring. Again, I think as we've talked about earlier, we're starting to see some locations that are requiring trained medical personnel on site. And we're starting to run into questions on that. Is that an insurance covered, or does that have to be covered by the contractor under their general conditions or field services? And are we now into a change order? So I think those are kind of the day-to-day kind of, I guess, I'll not probably nuisances, but those are some of the challenges from the industry that we're running into right now. And lastly, I would say the challenge of trying to work remotely. We've actually had several job walks now that we've done on Zoom, and it's been kind of interesting where we've had some airfield projects where we've actually gotten drones to go out and fly over the airfield, and the contractors can do job walks. So that's an interesting kind of risk element to it when you start getting contractors to bid on that they're relying on a drone on a Zoom camera. So I'm still waiting to see how that's going to impact the industry, and I'd love to hear what some of the industry folks have to say about what kind of confidence they have in inspections like that as people start buying insurance to perform work. So.
So Roger, you bring some unique insight here, as I mentioned in the introduction, because you spent 15 years at LAWA, and you were in charge of managing, what is really one of the larger P3 programs in the country. And I recalled looking at the contractual instruments and the insurance program for that P3 for the APM system, and it was highly customized. And at the time that project was let out, I would unequivocally say it was probably gold standard in the industry for comprehensive insurance coverage. Since you were part of the development of that program, sitting here today, are there any different things that you would do or any new coverages that you would consider on a going forward basis as a result of what we've learned through this COVID crisis?
I would certainly change the force majeure language in the contract. I can honestly say that. Other than that, no, I mean, I will tell you, I think we had some great advisors, and there were a number of things. You've already mentioned it. You brought up the whole bond issue. As if you're familiar with P3s, I mean, if you've got a true P3, a performance bond requirement for the contractor is effectively for the city a waste of money, because they're going to pass that on to the city. But there's all sorts of other coverages that are coming out of that P3 contract. So one of the things that we were able to do was actually get an ordinance through our city council. The city of Los Angeles in California is a charter municipal corporation, so we don't have a lot of the same requirements that a general law corporation would have. And we were able to get an ordinance passed that reduced our bonding requirements, for example, to where we could reduce the bonds to strictly the amount of the project that we were paying for, which on the APM contract and the contract were approximately 50% of the capital cost. So those reductions right there saved us millions and millions of dollars in cost. So I can't think today, like I said, outside of really seriously relooking at the force majeure, and even there, I would think the concessionaire, the developer on both P3 projects would probably want to reopen those as well if they had an opportunity.
So Roger, now that you've flipped from the public sector to the private sector, advising the public sector, unlike Catrina and Mike that are managing one project, I assume you were advising project executives on multiple projects. Have you experienced any unique challenges or complications or scenarios that neither Catrina or Mike have experienced so far? Anything that you've seen that is unique?
I mean, yeah, and I think part of it again is, we're looking at, looking at several P3 projects, and I would say the unique thing right now, and again, it's predominantly because of uncertainty that's going on right now, but obviously on the financial markets, the bond markets, even the credit agencies, right now there is so much uncertainty at getting decisions, to get things done and move forward. I think we're in an interesting time. So nothing stopped, but I think we're seeing a lot of people. I mean, let's face it, there's not a model out there today that anybody's used for virtually anything that you can look at today and say, this model gives me confidence moving forward. So this is uncharted territory for all of us. So, I mean, we can do that. Mike and Catrina and I, I mean, we've been using operation models, whether it's the FAA terminal area forecast or our own models. You mentioned I was at LAWA during 9/11. I was there through SARS and the great, recession. The recovery from COVID is not going to look anything like any one of those. So I think we're all encouraged that it's, at some point aviation will come back. I just, anybody knows what it looks like right now. So again, from my perspective, and maybe what I'm seeing because I'm working across a broader range of contract vehicles and delivery vehicles, is the uncertainty is causing people to ask more questions and different questions than they've asked in the past.
Thank you, Roger. That's been very helpful. So Nicole, we have not really talked about professional liability coverage, which is obviously a large sector of what we deal with here on these major infrastructure projects. Can you give us and the audience some thoughts on how professional liability coverage has changed for airport construction projects in this post-COVID or almost post-COVID scenario?
Absolutely. So I think that we sort of touched on it with Mike and sort of the idea, and Catrina, the idea that the insurance programs are already in place. So the ones that are in place are probably pretty solid, right? That most of you require professional liability, all of your sub-consultants carry that. That's really the third-party coverage. So when we start looking at the impacts of COVID, a lot of the lines of business you're talking about are first party, right? The owners can trigger their own program. That's where they're looking for coverage. We really haven't felt that ripple yet, and I say yet, through the third party liability market. So I know, Roger, you hit on it right away, is sort of, it's been a volatile market claims wise prior to COVID, right? So we had some really, really banner years for a lot of design professionals, a lot of projects. And when you have a lot of projects and a lot of busy consultants, what do you have? You have a lot of claims. So, it's just sort of the way it's going. You mentioned SDI, the book of business there, the claims are booming. It goes back to why Roger's seeing a lot of, he's talking about rate increases. It's just that was existing prior to this. So as you talk about uncertainty, here you are, as I tell people, I'm in the game of crisis. So, when all of my neighbors were, excited the first couple of days working from home, I was like, yeah, I'm in crisis mode here. So I think being in insurance and seeing it, we were already talking about claims. We were already kind of dealing with it. So going into the after COVID, we have not seen an uptick, again, luckily, in claims or claims activity. As many of you know, professional liability insurance has a loss prevention mitigation element to it. So we have received a lot of mitigation reports, so circumstance reporting, that allows us to know whether a project is delayed, there's a supply chain issue. So we've yet to see, and I blame it a little bit on hopefully that the courts aren't open. We haven't seen a number of third-party claims, but as all of you have been talking about, when you trigger those first-party coverages, and Richard's going to talk a little bit about that, the subrogation that comes after that is what really impacts the professional liability market. So we're we're seeing diminishment in capacity too. Go ahead. No, please, Robert.
No, my apologies. Didn't mean to cut you off there. So, we started very specifically with the question on professional liability. Let me back it up a little bit more at the 20,000 foot level, because I know you're knee deep in the industry. Any insights on how or if the exposures have changed in airport design and construction?
Yeah, first I'll talk about, I think Catrina hit it right on the head, cyber. So cyber cover right now is really popular. The rates are up, ransomware claims, people working from home, and the ability to the way we're transacting business. And one of the things I was reading this morning was really about how much authority do your employees have, right? How much access do they have? Do they have too much? Because as you're working from home, the ability to intercept that is greater. So the risks on cyber has definitely changed the landscape for contractors and just the landscape in general. So that I've definitely seen. Project insurance used to be quite a hot topic when we're talking about project-specific insurance from a PL standpoint. We would really be building out these towers of, all the professional liability. The consultants would be on one policy. We'd be able to give them an extended reporting period. So that would be a 20-year policy for a large project. And that capacity has really shrunk. So I think you're going to see that more of that as far as that capacity issue. That will impact a lot of the airport projects.
So the scope of professional liability coverage obviously goes hand in hand with the standard of care in the industry, which is obviously a state-by-state law question. Do you have any personal insights or thoughts on whether the standard of care for design professionals will actually morph during and after this pandemic period?
Yeah, it's a great question because, Robert, you mentioned it the other day when we were talking about developers wanting to have health professionals as consultants on projects, right? So we're seeing this in airports, you're going to see it in schools, you're going to see it really across the board. And that increased standard of care is coming at contractors, it's coming, at the owners of the airports, it's also coming at, our consultants very quickly. The fact that what is your standard of care to prevent the spread of a virus like COVID, right? What are your obligations? And then also, can you design around it? Can you build to that? If you don't create enough room, we don't have the standards yet set. So I think, again, that's going to be a really open argument, but you're going to see the requirements going up as far as your contractual requirements, and just in general your negligence standard of care increasing, just by the fact that by virtue now we're aware of it, we want to prevent it. What are we going to do? And at the school, there's a couple of school districts that have already reached out. I think Gensler was involved in one of them, where they're just sort of saying, okay, look, here's what we want to do. Tell us how to do it. And the architects are coming back saying, well, tell us what you want, and they're saying, well, we want everyone to be safe, right? That's a really high burden right there. So I think you're going to see a lot more of this expansion of the standard of care, what's expected of us, and that scope of public safety is really going to be growing. So that's really going to put quite a burden. I think Roger, you hit it. It's just unknown, right? So my actuaries are probably pulling their hair out right now with no real way of knowing what exactly I'm taking on every time I write a policy. But yeah, the standard of care is something we all need to look at. Yeah.
Yeah, I'll be candid. When we had our conference call getting ready for this seminar, that was the issue that probably caught me by surprise the most, because I frankly had not thought of it. The airport operations impact, the impact to contractors, those are a little bit more concrete, a little bit easier to put your fingers on. But exactly how, an architect or an engineer has this elevated standard relative to, like you said, healthcare or pandemics and the like, frankly, had not even thought about it. But now you can start to see where maybe the incorporation of, CDC guidance or, literature along those lines do make it into design specifications, space design, and the like. I think it's going to be fascinating in the industry to follow how that morphs and what it totally materializes into. I don't know how to put my hands around that one.
Well, actually, if you take a look at,
fascinating is the term I'd use.
yeah, fascinating is not my term, but I will tell you, in Kentucky, if you take a look at the Kentucky school district, I'll compare it to school shootings, right? So when we had a number of school shootings, all of you are familiar with that, horrific topic, that some of the school districts came out with, what are the standards to prevent that, right? Is it a longer driveway? Is it being able to see visually the landscape? So you're kind of raising that same standard. So Robert, if you want to read all about that, I think that's also very akin to sort of the expectations come there. And that, by virtue of that, I also, employment practices liability, right? All of you are employers of people, and right now that is just on the cusp of it as well, because the standard of care for an employer and what you need to protect your employees from, and the precautions you need to take are in that very same vein. So it really is, the expectations on everyone have gone up. And again, that duty, that obligation that you owe to people, and then what that standard is, that is really going to be the next big thing. I know Richard's going to talk a little bit about the business, interruption and things of that nature, but this is going to be its own, from a negligence and liability standpoint, this is going to be a topic that we're going to hear about again and again. And Robert, maybe you can start drafting the contract language to sort of lay that out, just throwing that out there.
Well, I'm glad you educated me on the issue, because as I said, left field for me, and I'm still having a hard time trying to figure out exactly what this all looks like. But the way you articulate it and using that exemplar to Kentucky, you can start to see how it makes sense. So I think it's probably a separate seminar topic in the making, because you can see how this is going to evolve over time. And there's like Roger keeps saying, a lot of uncertainty, and a lot of uncertainty breeds a lot of cost implications and the like. So let me go ahead and flip to the insurance industry perspective, and I'm going to pick on my good friend Rich Terlecki. If anybody is knee-deep on insurance coverage in this crisis, and in particular business interruption coverage, it is Mr. Terlecki. So Rich, let me just say, before we get to that $64,000 question on business interruption coverage, I would love to pick your brain on some insights on business loss statistics in this country and how that correlates to the insurance reserves, because it seems to me one can dwarf the other.
Thank you, Robert. What most people don't realize is there was a study done that says just for small businesses, and a small business is defined as a business with with 100 employees or less, that right now, if every one of them turned in a business interruption claim, the losses per month would be somewhere between $225 billion and $431 billion a month, just for small businesses. right now, the entire insurance industry, not just property, has surplus of about roughly 800 billion. So if every small business in the United States was granted a business interruption claim, they would bankrupt the entire insurance industry in approximately 2 months. So it's a pretty scary scenario.
So Rich, I subscribe, like many lawyers do and many people in the industry, to a service called Law 360 that sort of gives you the daily updates on what's going on in the industry and the courts. And right around 3:05, as we were getting ready to kickstart this program, there was an article that came out about the famed TV lawyer Mark Garagos and his lawsuit against his carrier relative to him seeking business interruption damages as a result of COVID. I've certainly been seeing a lot more lawyers advertising about it and writing articles relative to their ability to, pierce the property policies, pierce the builder's risk policies to obtain that type of coverage. Let me flip the question on you from the industry. What is your take on, one, whether these policies were ever designed to provide business interruption coverage in a pandemic type scenario, and two, whether you think there is any avenue for coverage in this scenario?
Well, from what I've seen in every case that's been brought forward so far, the courts have ruled that physical damage or loss is a trigger in a property policy, and it's also a trigger for business interruption. And the way the courts have been ruling is that something that you can clean up with a Clorox wipe or something that cleans itself up within a 2-hour time frame is not causing structural or permanent damage to the location. I just received after you and I spoke, Robert, that through Gallagher, through the company that I work for, so far we've had 2,801 clients turn in claims, 4,047 claims. Right now, 12.9% of them are closed. The denial rate has been at 81.2%, with 9.7 having reservation of rights. The only accepted claims are running at about 8.8, and those are the ones that had specific wording in there that included communicable disease.
Could you flesh that out? Pardon the terminology there, but there are some builder's risk policies that actually have that distinct language that you just articulated that others do not, that perhaps create an open window?
I'm aware of, FM Global, Affiliated FM, and Allianz have communicable disease clauses with sublimits in them within their policies where at least some amount of coverage is being granted. That, and of course, it's not just under property policies. As Catrina mentioned, there's pollution policies. There's all different types of policies that these claims are being filed under. But I did see some exact numbers, but the majority of people are looking. They're making a comment that they've paid for business interruption for years. They've never collected on it, and now that their business can't operate, they think they should automatically be paid. And quite honestly, obviously, they didn't understand the way business interruption worked.
So, there's a small sliver of policies, as you indicated, that may have an open window for coverage. The remainder predominantly do not. So I assume the industry is going to start seeing an influx of declaratory relief actions or lawsuits against their carriers. Are you already starting to see that type of activity?
Yes. The gentleman out in Los Angeles, I believe, Travelers turned around and filed for a declaratory judgment, and all of them the courts are finding that there is no physical loss or damage being caused by COVID-19. And with that in mind, there is no trigger within the policy.
So the industry has seen some, state and federal legislators actually go live on their desire to, pass bills to, I don't know if they retroactively create coverage or maybe try to interpret how coverage exists under these policies. It seems a bit ex post facto, but I'm sort of curious from, the industry side, what's your take on these initiatives? Are they something that could actually happen, or is it just talk?
Robert, you never know how the courts are going to rule, and that I know what we're encouraging our clients to do, but I mean, we've had 8 legislatures so far turn around and try to state that insurance companies should pay for the business interruption, and none of those have actually come to fruition as far as forcing the insurance company to change. And you had asked earlier about the intent of the policy. The idea of an insurance policy is to have the law of large numbers, where you have a bunch of policy holders you collect premium from, and you pay a few, the ones that have losses, from collecting the premium from the law of large numbers. Insurance was never designed to pay every policy holder on a claim for a claim at the same time. It just can't happen.
So Rich, a few seconds ago, you just made a comment about what some of your clients are doing, or maybe what you're advising your client. Could you give us some insight on what you're seeing some of the public sector airports do vis-a-vis their business interruption coverage, whether it's through property or builder's risk?
Would you ask that again, Rob?
Yeah, you had mentioned. Go ahead.
Well, the one area that nobody has thought of yet, that everybody's trying to get their claims paid for through business interruption and everything, but with such a drop in traffic and everything else, all their premiums were based off of certain rating mechanisms, where I've not heard of many airports yet. I've heard of a few where they're going back to their underwriters and saying, wait a minute, my aviation liability was based upon a certain number of employments. That isn't going to happen. So quite frankly, instead of trying to fight it from the claim standpoint, I think there's a lot of airports that may be due some type of a return of premium just based off the rating.
So Rich, how does that work or interface with some of the premium earned provisions in these policies? For example, some policies are, 100% premium earned at time of inception.
I would share with you that most of the policies we place, unless it's in a catastrophic prone area,
oops. Okay. There we go. Okay. Sorry about that. One computer went dead and I had to pick up another one. But I believe I'm back on now.
Hear you.
Let's see here. Here we go. Robert, can you still hear me?
Yes, we do hear you clearly. Rich, did we lose you?
Robert, can you hear me?
Yes, we can hear you.
Okay. You can hear, I got a feeling you can hear me, but I can't hear you. So let me try one other thing. Can you hear me now?
Yes, we hear you clearly.
There we go. Thank you. I apologize for the technical difficulty.
You actually just gave us a little entertainment.
I apologize. That's jumping from one computer to the other in the middle of a webinar. That's not the easiest thing I've ever done in my life. other questions you might have, Robert?
Yeah, no, you were answering the question about the relationship between the premium earned provisions, where some policies require, literally say 100% of the premium is earned as of the time of policy inception. How that relates to that point you were making about some airports going back to their carriers and asking for a refund on some percentage of their premium, since the premiums were based on a certain level of business activity and revenue.
I'm going to tell you that about at least 80 or 90% of our policies do not have 100% premium earned. So they should be able to go back and utilize the concept of looking for some type of return premium. Just simply, if you think about it from a business interruption standpoint, if they reported 500 million for an annual basis and they only have 300 million due to the pandemic, that's telling me they're due back a certain amount of their premium because the exposure wasn't there that the underwriter charged for.
Sure. So Rich, let me ask you one last question before we move on to the next topic section. So, from my perspective, COVID-19 clearly highlights some coverage gaps that we see in the industry. What do you see for the future the future of coverage in this arena?
Well, right now there's two thoughts going on with that right now. Two different groups that are taking it to Washington, and one of them is talking about having it run by FEMA, and that, which is not my preferred method, and the other one is talking about tailoring it after something like the Terrorism Risk Insurance Act, where it's a combination of both public and private, where the only people that can afford to back up a pandemic is the federal government.
Understood. So I want to go ahead and say, yes, please.
Robert, sorry, before you go off that topic, just on your question about the return of premium, 2 states, New Jersey and California, have already released acts that are requiring insurance companies for various lines of business. So you might want to check your state insurance commission and just figure out if there are actually acts being passed, and they're requiring actuaries and the like to come up with it. Whether it's fully earned or not, it doesn't matter. Certain states are requiring that, so you might want to look into that. So like New Jersey and California, I think, is the other one. So there's a lot of direction going on.
Fantastic advice for the audience and for all of us, frankly. Are these 2 states that have done this specifically as a result of COVID?
Yes.
Outstanding.
So if you followed along, there have been literally regulatory notices hourly in the very beginning of just sort of how to respond, or requiring, like, dealing with cancellations or payment of premium. But there are a couple of states that have been really proactive. So I would take a look and see, as this goes on a little bit longer, we're going to see more states sort of, and it applies to certain lines of business. It's very specific, but anything, it's pretty general too, in as far as what lines will be touched. So I would take a look at that.
Will do. Thank you very much. So the next segment really deals with, sort of parting thoughts, opening up the floor to questions. Question for Chris Oswald. I've not seen any questions populated on my question screen, so I don't know how you want to filter in any audience questions, or if any are pending.
Yeah, I appreciate that. We have not had all that many questions coming through, so I'd certainly encourage folks as we close in on the kind of wrap up time here, if you've had some that have occurred to you, and I've also sent out a couple of prompts via the chat window to y'all on the audience side. So if you've got some thoughts on either one of those prompts that I've sent out, really, actually one particular one built off Nicole's notes, and I think all of the panelists saw that on questions about issues getting coverage for projects, since we are kind of focused on construction projects here, and also new standards of care. But actually, if I can come back from an ACI-NA perspective on the standards of care and just introduce one other point on that front, knowing that it's a little bit broader than the project focus we've got here. An interesting challenge that we've certainly been needing to deal with as we've talked to a number of the airport directors has been the really kind of multiplicated, if I can make up that word, sets of care that we've got out there, right? Because we don't have a single federal, and we do see this internationally a little bit, with individual other countries having a little bit more defined standards of care coming out from the government itself. Here we have, probably in the best of cases, really 50 states standards of care, various states that have put things forward. And I'd be interested in getting the panel's opinion on the extent to which that's acting as a kind of challenging issue. And then Nicole and Rich, maybe specifically to you guys, how you see that really putting the onus on insurers to really, be frontline in defining some of those standards of care, because it does feel like in absence of regulatory action or more definitive action, you guys are really, one of those backstops there, kind of needing to define that. And stop me if you can't answer that, either one of you.
No, I mean, Catrina, do you want to go first? Because I think this kind of, plays into sort of, your role more from a risk management standpoint.
Sure.
Weigh in.
Agreed. Thank you, Nicole. And just from that perspective, Chris, and Nicole, you actually touched on it earlier with some of our E&O and D&O. Pretty much every organization right now, if you have not returned employees to the workplace, you're working on a plan. So whether they're working remotely, virtually, working at home, pretty much every organization is making choices right now as to when and how they will return their employees to the physical workplace. So I'm sure at some point we will, if we have not already, begin to see lawsuits on, did you return me too soon? Were you aware of these other issues and implications as it's related to COVID? And of course, that answer is no, because this is evolving as we go. Almost every other week, there's something new from the CDC regarding COVID and implications and next steps. As you all remember, when it first started, we were doing face covers for first responders, and then it became face covers for just emergency, and then face covers for everyone. So now as this continues to evolve, we can see these policies coming into play as we're beginning to make those choices and decisions on returning employees to the workplace. So from a risk perspective, that's definitely something that we're evaluating and that we're trying to mitigate against, to make sure that we're returning employees at a time in which we have more answers, when it's safe and when we can best protect not only their health, but their well-being as well.
I would just like to add that right now, I believe there are 4 states which have relieved certain companies of liability for bringing people back to work as long as they're following CDC guidelines and everything. And at least I know that at a national level, the House is trying to get another bill passed with another $3 trillion bill passed. And the Senate's sitting there and saying, the only way we'll even listen to you is if you give us some type of liability relief, because the country just can't handle the amount of lawsuits that there would be without the liability relief.
Yeah, I mean, Robert, I guess, Catrina, you kind of hit on a lot of the topics that, I'm thinking of as we look at all of these different aspects. You have guidelines, recommendations. I mean, Robert, you and I both know from a legal perspective, and those, FAA guidelines and recommendations you are familiar with, and you're like, wait, what do you want me to do? What do I have to do? What is the minimum here? And well, that's just our recommendation. Well, but then if you get in trouble, they're going to be like, well, that was our recommendation. You're going to be like, but I feel like a little kid, like my mom says I have to versus like I better, or I'm going to get grounded, right? It's a kind of that thing, like, give me a rule and I'll follow it. Give me a code and I'll comply with it. Give me a recommendation that's really up to me. I've got an ethics issue, but I also want to hear, so I think, and I feel like the FAA does this all the time. I feel like they're the kings of it with the recommended guidelines, sort of maybe here's what we think. You don't have to report, maybe you do. So knowing that, that's where we are, right? They make fun of that video where she's like, stay in the house unless you have to go outside of the house. It's sort of making fun of it, right. But how is Catrina going to risk manage to that standard, right? I bring the people back, they've got to wear face masks, they got to wipe it down, I don't know. So that's the standard, that we're going to fight for. I think the insurance companies try our best because we want to control that risk, right? We want to be able to put our arms around it and say, here's what it is. But, you know, as you know, that negligence standard is pretty reasonable person. I mean, reasonable standards. You're going to be in it. We're going to be fighting this for a long time, you know, and what did you know and how did you know it? And, you know, again, with our employees and then also with the users, right? The people that are coming in, the public, you know, the standard, you know, as Richard sort of noted, you know, courts are willing to throw out anything at this point. I just don't know. I mean, you ask about, can you renegotiate a contract? I mean, I think that's called the Constitution. If you really want to take it up that far, you can't just start renegotiating people's contracts with each other. So yeah, it's going to be interesting. So Catrina, I'm sure I'll be hearing you speak on this more as we go from a risk management perspective. You got your hands full, lady. So I'm, you know, but there's a lot of that. So I really, I'm like, oh, I mean, that's a big thing to get your arms around. But yeah, I think it's going to be developing, and I think you're going to see insurance companies try to control it. You're going to see AIA, you're going to see ACEC. Everyone's making recommendations. I'm sure the CDC will jump in. You know, you're going to have a lot of masters, you know, to answer to.
Without a doubt. So Chris, I think Nicole just volunteered for the next ACI seminar.
That's awesome. Katrina and I are going to do it together. It'll be great.
Oh, this sounds good. So Catrina and Nicole can work with Ashley Singh, my colleague who is Secretary to Risk Management on that, because I think there's another great question which gets into that broad issue, and it's the one kind of major question that came up that wasn't kind of more technically related to the way the webinar was going, which is, again, one that probably isn't aimed at the project side, but what does the panel see? I'll just read it off. What does the panel see as the long-term impact of COVID-19 on the future of air travel and the numbers given kind of what airlines might do with seats on planes? And again, we're getting much broader. Again, I think all of us can probably opine in as, you know, aviation industry, those that are involved in the aviation industry on a question like how is this going to happen? You know, are we going to see middle seats closed off? And I think, you know, just from the ACI-NA perspective on that front, I think we're seeing, you know, such a varied, just like in that kind of regulatory or standard of care discussion, just such a variety of responses on that front, from, you know, Delta that has been a little bit more you know, substantive in saying what it's going to do with middle seats, to some other airlines, obviously them a little bit unnamed right now, that have suggested that they won't book those seats in, but are going to fill them. And, you know, it's I think exemplary of again, varying standards of care, and something that keeps arising, you know, outside of maybe coming across to affect projects for us more in as we look at, you know, the broad context of airport recovery, is if you're getting on an airplane where there isn't a requirement that you're wearing a facial covering, kind of hard and fast, what does it mean for all those steps that airports are wanting to take or needing to take to socially distance, require masks or facial coverings in the terminal? How does that play into the overall risk management of a trip? And again, I've defined a situation so far outside this panel's coverage, but I think one that is critical as we face this as an industry is what is the passenger expecting in terms of management of risk, and how do we address that within the context of what have become kind of cultural flashpoints almost when we look at, you know, COVID-19 response. I don't know that we can answer that, Robert, which is why you're the moderator and I'm not on the session. But
well, then does that mean I get to tell you to move on?
Absolutely, you do. So come back to your panel, please.
No, I'm teasing. Obviously, these are fascinating questions. I'm a chronic optimist, you know, a half glass full kind of guy. We were having very much the same conversation in the wake of 9/11, and a lot of people saying that the aviation sector would never be back. We heard the same thing in 2008, and the aviation sector bounced right back and was back better than ever. Again, I'm going to remain optimistic. It's going to take time. Clearly, we're going to see some change, but I do believe that the aviation sector is going to rebound, and I do not have long-term concerns about the industry or the sector. I just think we've got a new heightened sense of healthcare issues to grapple with, risk management issues to grapple with, and we're going to see it manifest in how we deliver projects, how we contract for projects, and how we insure for projects. So it may be fascinating to do this program again in another 6 months, because I think everybody here will have a new subset of issues that they've dealt with, and probably some pretty creative solutions on how they've grappled with it. So, you know, I'll commend you, Chris, for putting together this program. I think it's been remarkably helpful.
Robert, one of the things I would add to that, based on somebody that's been involved in airport planning and design and development for over 4 decades now, I guess. One of the benefits that I see coming out of this is there were a number of challenges that I think the industry has been slow to pick up on. And I'll bring one, just the aging traveler, in my opinion, has been one that has required a lot more focus. So I think what's happening now through this pandemic is requiring us to look at more than just passenger convenience. And it's requiring us to look at passenger safety, and not just anti-terrorism type safety, but actually safety during the process. So I think there are some benefits. I agree with you. I think people are too used to traveling to just give up completely on traveling, but I don't think it's going to come back until people are convinced that we've got solutions to a lot of their concerns, which again is going to force the industry to pay attention to things that we haven't paid attention to in the past.
Yeah, those are fantastic points. Rich, I think you were leading into with a closing comment as well.
Yeah, my closing comment would just be 2 things. Nicole mentioned it. You don't know how the courts are going to rule. So if there's any one thought, it would be, don't hesitate to put your carrier on notice. The other thing that I would say is in the market right now, it was chaotic before the pandemic. It was chaotic before all the riots. It's even in worse shape now. Sometimes your best friend can be your incumbent carrier. So if you've got a long-term relationship, value that and try to work with your current carrier to the best of your ability.
Fair points, especially the notification issue. I know Nicole knows that well from her former career as a litigator. You got to give timely notice. If you don't, sometimes you end up waiving the claim. So, Rich, that's excellent advice. Even if there's uncertainty on coverage, at least do what you can to preserve your claim. Well, Chris, I think we're a few minutes past the scheduled time, and I know everybody's time is valuable. Do you want to bring the panel seminar to a closure?
Yes, I'll bring it on in for landing, and appreciate, Robert, again, all your work in putting the session together, and just great job moderating, and all the panelists, Mike, Nicole, Roger, Catrina, and Richard, all your work on helping us to put this together and get a really valuable discussion out in front of the 3 associations members. We've already gone through Q&A, so I did want to just get right to the thanks for participation. This is going to be the last of the ACSS webinar series for now, but stay tuned for some additional future web-enabled events from all 3 associations. I know that AGC in particular has had a very, very active webinar series, and Nicole, I think you've been participating with ACC in particular, Roger maybe as well, on some of the work that ACC has been doing. So I think as you've set it up, Robert, we've got a whole host of topics that are going to be coming up, not just on the construction side, but certainly on the risk management side. And this certainly this event, what we've been experiencing in terms of kind of societal unrest over the last last couple of weeks as well, do point to a lot of uncertainty and certainly challenges in risk management writ large. So with that, certainly lots and lots to come as we go forward. So again, thank you very much, and I hope all of you remotely can join me in remotely or virtually thanking our panelists. And with that, we will close up. Thanks so much.
Thank you all.
Thank you.